Good evening, everyone from London in the UK. Welcome. Thank you for joining our call today. A couple of you got video on. If you could just put your thumb up if you can hear me, that would be super. Wonderful. Thank you, Giuseppe. So my name's Alex Banks. I'm your host for this evening. We're here to celebrate the launch of my friend Conor Svensson's book, The Blockchain Innovators Handbook. In London, we had a super launch event on Tuesday in central London. Nancy's putting some photos up so you can see how that went. It was a really terrific turnout, particularly given obviously the global pandemic. So just in case you're not familiar with Conor's book, here it is, The Blockchain Innovators Handbook. It's basically a soup to nuts of blockchain, broken out into three really easy to consume parts. The first takes you on a journey to understand the technology and its potential. The second helps you to identify and develop use cases. And the third is your delivery toolbox. It's an excellent grounding for anyone who's interested in blockchain. And what better place to start today's event than with a reading from the book itself. So if you would please welcome Conor with a short reading from chapter 3.
Thanks, Alex. Hey, everyone. It's just great to see so many people here. So as Alex said, this is a reading from chapter 3, which is, chapter 3 is called A Future Tale. And really what I wanted to do here was highlight, how things could look in the future once blockchain does become a more, core part of our lives. I think this stuff's very helpful just to try and think about the bigger picture implications around these technologies and where they will go. So it's been just over 10 years since the global COVID-19 pandemic, and you've woken up in your hotel room in Singapore. You reach your phone to check for messages. Your friend Layla has sent you a message about the virtual reality gig you attended last night. Using your VR headset, you're up close with the Rolling Stones as they perform Jumping Jack Flash for the very last time. You spent that little bit extra to get an exclusive ticket, which lives permanently in your digital wallet. The ticket is not only proof that you attended the event, but it's also an exclusive collectible that enables the holder to replay the event and bring their friends with them down the line whenever they want to see it. Down the line, if you decide you'd like someone else to experience that event, you can sell it via a digital collectibles marketplace. Regardless of how much you sell it for, a set percentage of the sale price is split between the band and the event organizers, and the rest is yours after the marketplace has taken its fees. Most of the possessions you have purchased lately sit inside your digital wallet. It's so much easier having everything in one place rather than spread across a series of emails, websites, and platforms, as used to be the case a decade ago. You decide to listen to some music to get yourself ready for the day ahead. You see that your favorite rapper, Nas, has released a new album that you wanted to check out. As you start listening, details of this play are being recorded, and you can see how much he is being paid as you listen to his latest album. Although you don't think it's his best work, you keep playing it to maximize the royalties he receives. You need to check out of your hotel today, and you're struck by how much easier it is than it used to be. You just touch your smartwatch reader when you leave the room to lock the door, and again when you leave the hotel. Your smartwatch is connected to your digital wallet, which contains your digital identity. You use your digital identity to enter into an agreement with the hotel for the booking, and the funds from this trip are held in escrow via a smart contract until you checked out, where they are automatically released to the hotel at the end of your stay. Outside of the hotel, you jump in a taxi to the airport. Once you reach the airport, you're notified of the total cost of the journey, including the tolls, which you approve. Unlike 10 years previously, however, there is no payment provider here. The payment goes out of your digital wallet directly to the taxi operator. You have your plane ticket sitting in your digital wallet, where you head straight to security and passport control, where you use your digital identity again. This digital identity is linked to your digital passport. Long gone are the days of having to show an actual passport. Now all you have to do is scan a QR code at passport control using your digital wallet and approve sending a message to prove who you are. The facial recognition software on your phone's camera is used to prove that the person scanning the code is the real person associated with that identity. You're then free to head into the departure lounge. You grab a coffee, which tastes surprisingly good for an airport coffee. There's a QR code on the cup that you scan with your phone. This takes you to a site where you can see that the beans came from a district of Lintong Nahuta to the southwest of Lake Toba in the Indonesian island of Sumatra, with pictures of the family who harvested them. From there, the beans travel to Singapore, where they were roasted only 2 weeks ago before being distributed to the coffee shop you're in now. Sure, it's only a cup of coffee, but when it tastes this good, it's good to know what made it this way. While sitting around, you take a quick look at your asset portfolio. You have various digital assets that are all generating incomes of 5 to 15% annually, regardless of how small an amount you have in them. Some of these are riskier than others, but they balance out. You also hold digital dollars, euros, and pounds, which are generating yields at the lower end of this range, but way better than what you used to get in a bank previously. The airline you're flying with sends you a message about how you'd like to offset the carbon emissions from your flight. To speed up the transition to net zero emissions in the airline industry, paying for offsets is a mandatory component of all ticket sales. These offsets are created by a number of different clean energy projects with their origin tracked on a blockchain. You select a wind power project that will ultimately offset 1.23 million tons of carbon dioxide equivalent over 7 years. And in your airline's app, you can see that a certain number of digital carbon offset equivalent tokens have been purchased from the project, assigned to your digital wallet to offset these emissions generated by the flight. You check into social media to get some commentary from the people that inspire you with no BS advice and thoughts. You tip some of them with microtransactions as a thank you for keeping you inspired. It used to be so expensive to do this back when you used credit cards. There was a minimum fee of 50 cents for the payment processors, whereas now you're able to send fractions of a cent as easy as you can like a post on social media. You're going to have a long flight back to London, so rather than risk the choppy internet connectivity you still get on airplanes, you head back online to a digital marketplace to purchase some secondhand clothes for your avatar in Grand Theft Auto 7. You find some awesome retro Air Max trainers that were part of a limited edition digital release by Nike. You can't believe someone is happy to sell them. Your avatar is getting the wardrobe you wish you had. You're now feeling all set for your flight. You've got a few hours to yourself where you can immerse yourselves in Grand Theft Auto 7 before drifting off to sleep and waking up in London, ready to get back to the family. As challenging as framing the future can be, many of the above scenarios are from a future that is, in fact, far closer than you think. Companies have already made significant progress in many of the innovations we describe here, in significant part due to their use of blockchain technology.
Thanks very much, Conor. So in writing the Blockchain Innovators Handbook, Conor enlisted the support of a number of amazing people. One of those is called Rael Paul. He's a macro investor and the CEO and co-founder of a company called Real Vision. So Rael describes himself as a business cycle economist, an economic historian, and an investment strategist. And Conor was absolutely thrilled when Rael offered to write the foreword to the book. We'd like to play you a short video interview with Conor and Rael now.
Hey, Rael. So, yeah, it's awesome to have you here. First of all, why is it that you're not able to join us here in person tonight?
Well, sadly, we've kind of got a lot of quarantines here in the Cayman Islands. I'm also in Vegas right now as well for the Real Vision event there. So we've got some of the biggest speakers in blockchain all at the event. So sadly, not able to make it over, but would have loved to.
And I'd love to go back as well, just like a few months to when I first reached out to you and said, hey, Rael, I've got this book that I'm working on. Would you be interested in writing a foreword there? Because I was over the moon when you came back with like a positive response there. But what was it that kind of attracted you to it and made you feel, this is a good opportunity for it?
Well, I think that the fact that you're so embedded in the space, you're so knowledgeable in the space, yet when you started showing me your writing, you were showing me the clarity with which you could communicate to people. And I'm a passionate believer in educating people about this disruptive technology. I think it's one of the biggest things we're ever going to see. And so the moment you reached out, I thought this is exactly what I want to get behind, to make sure that businesses, business leaders, and others get to understand what this really means for them. And you weren't approaching it in the standard way that everybody else was, which was, Bitcoin and Ethereum and, buying it for speculation or investment or whatever it was. You were actually looking at the broader concept of, okay, well, what does this mean for business? What does it mean for the economies? How does the world look with this new technology? And that, I think, is a really powerful and important message.
And it's one of those ones that's just constantly changing. I think even since writing the book now, the whole metaverse narrative has started to emerge. But
it's almost impossible to stay on top of it. I mean, you nailed the metaverse. It was already in the book anyway. I mean, that was what I really liked about the book when you gave me an ability to read the full book, is that you had looked really into the future. It wasn't just here's a current state of affairs, it's where we're going. And the metaverse is this kind of weird concept that people don't want to believe because they think it's like Ready Player One and gaming world, but it's not. It's our digital future. It's when all these digital technologies come together. And, blockchain empowers most of that because it allows the ownership and transfer of assets in a digital world. There can be physical goods too. But, again, it's really important to people know where this is all going, because people need to plan. This is a wholesale change of global business models, and they have to plan for the future and understand, okay, what we know today is not what's going to be existing in 5 years' time. And this space is, as you know, moving at lightning speed, because as opposed to one company developing a new strategy, this is a distributed network of thousands of developers and entrepreneurs, all pushing the boundaries in all the different areas. So it's happening at a speed we've never seen before. I think one of the things I've looked at is the network adoption effects of crypto, or the digital asset ecosystem, is growing at twice the speed the internet grew at with the same number of users. Back then, the internet was growing at 63% a year back in 1997 with 150 million users. Right now, the digital asset market is growing at 113% a year. It's the fastest adoption of any technology the world has ever seen. And that's partly due to its distributed nature and how many smart people are developing so many things. So yeah, really interesting.
And it's funny that you mentioned that point, because of course it's one that made into the book. And when I first came across you, it was a few different people in my network had all kind of put out this great graph that you put together, charting the rise of the digital asset space and the internet there.
Yeah, I mean, look, I think it's the single most important chart. You don't need to know anything else almost, because basically if you extrapolate the trend, and what I did was lower the trend rate of growth over time, because networks slow as they get more saturated, more people onto the network. You still get to 1 billion users by 2024. We can't quite get our heads around that because it feels kind of niche and small, but 1 billion users by 2024 and about 3.5 to 4 billion users by 2030. I mean, that's staggering.
Absolutely. And actually kind of a related metric I learned earlier this week was that Facebook has over 2 billion active users on the platform too. So it kind of reached that scale without people necessarily noticing it as such. Yeah, most people were using it, but I don't think they realized quite how far the penetration has reached. And as you say, crypto and blockchain is going that way.
Yeah, and to that point, Facebook have gone into the metaverse, and they're launching their own stable coin, which is part of the crypto complex. So that's 2 to 3 billion people who have access to crypto rails. And then the central banks have joined in with central bank digital currencies. So it's going to be ubiquitous, faster than anybody can imagine.
Yeah, definitely. And I think that the funny thing is right now, it feels like it's actually compounding in terms of all the developments that are happening. A few years ago, you could kind of keep up with everything, it felt like, in some of the main protocols. And now there's just so much happening in terms of 24/7. You just can't follow everything.
Yeah, I mean, even since we started talking, the rise of NFTs as a business model, as a way of coalescing communities, the rise of the metaverse, social tokens, DeFi, it's at a blistering pace. And there's so much business experimentation going on, but with so many people doing it, it's, as I said before, it just keeps moving ahead faster than any of us can keep up with.
And out of interest, just with your company, Real Vision, how's it impacting what you guys do as well? Because you have some plans around this too.
Yeah, I think for us is realizing that community is the new business model, and that digital assets play a phenomenal role in creating network effects and coalescing community. So, you know, we're looking at how do we work for this Web 3.0 world, which people will hear more and more about. And that's really where your either your audience, your members, or your customers are all part of your network and share in the success of the network. So, you know, we're looking at launching a Real Vision token that gives people a currency for Real Vision. In addition, you know, we'll start using NFTs as digital assets that give you memberships or rights or other things. So, and then we're developing ways that we can integrate community into more of what we do. Things like crowdsourced asset management, where they can earn tokens by generating great trade ideas. So then they get paid by all the other members by saying that was a great trade idea. I'm going to trade it, and you get paid in tokens. So you create whole economies. I mean, I think these are digital sovereign states. They can be really small, or they can be gigantic in the case of Facebook. So yeah, I'm really focused on that. You know, we are having to pivot, much like everybody will. You know, we're slightly ahead of the game, but it's still a big pivot, and everyone has to get their head around the fact that it's not a relationship of firm customer. It's now this symbiotic relationship you have to create, and that only creates more network effects once you get it right. But there's going to be a lot of experimentation. Nobody knows the answers yet.
Yeah, and I think just, you know, given where you are in terms of you've really gone far down the rabbit hole there, the fact that, you know, you're adapting your business like this is, you know, to me, I'd be saying to people, you know, this is what everyone needs to be doing, and this is what was one of the core messages, I think, for the book, was wanting people to really adopt that innovator sort of mindset, because it's so important to see the ways in which this transformative change is going to impact every facet of life and business in the coming years.
Yes, and you can see it in the giant brands. People like Starbucks are creating their own token. We can see Adidas, Nike, all the fashion brands all moving towards NFTs. We're seeing a relentless pace. It's going to come out of the media industry. It's going to come out of the fashion industry, the music industry. They're all going to change. And everybody's going to be looking around and thinking, oh my God, what just happened? Much like it happened when the internet turned up. You know, it suddenly changed everything. So that's how big it is. I know it sounds hyperbolic, but it's not.
Absolutely. And hopefully that people anyway will be able to follow the lead. Companies like yours is, you know, taking in the space, and you know, we'll find the landscape looks very different in the next few years.
Yeah, and that's why your book is so important to me, is because it's going to help people understand the change that is taking place, to get people onto the front foot and not the back foot. And if you can do that, you're really empowering people. And, you know, hats off to you for writing it, because I know it's not easy to write a book. It's a lot of work.
It certainly helps when, you know, when you've got certain people on board like yourself with the forward side, you've got to make it happen.
Fantastic. Yeah, you even got Joe Lubin on there.
Yeah, cool. Well, thanks so much, Raoul. Much appreciated. And, you know, it's been, yeah, absolute pleasure always seeing your work as well in terms of what you're putting out there. And yeah, just really, really grateful for you coming on board with this project.
Yeah, good luck with everything. We're all educators. That's all we're doing here. So I do the same, you do the same. We just do it in different ways. But look, good luck with the book. It's fantastic. It should be a huge success.
Well, thank you.
What a fantastic interview, Conor. Really good. And one thing I hadn't noticed during our live event was that very impressive chair that Raoul's got in the background. Super. So guys, we're going to go into a little interview session with me and Conor now, with some questions that I've dreamt up, but I'm sure you've got some much better ones. So if you do have a question for Conor, or you think of one as we go through this section, please just type it into the chat and we'll get Conor to answer it shortly. So I feel like I can relax now, Conor. It's a high pressure event, this. Conor and I have been friends for many years. We met at the investment bank, UBS, about 15 years ago, where Conor was responsible for the software that managed all the trading links with the stock exchanges. It was a really challenging technical environment with very high transaction volumes, very high resiliency requirements and zero tolerance for downtime. Really an excellent grounding for what was to come. And it got me thinking, Conor, you spent your first decade in work in and around the financial markets, and that crossed the time of the financial crisis. So were there any big takeaways for you with that?
It's funny, actually, when you asked this question the second time round after the book launch, and you've had more time to kind of think about it as well. And I think there's one thing that's like really, really key about that experience that does actually quite nicely map over to blockchains and DLT. Back in the early 2000s, you had, it was considered back then within the banking arena and finance arena almost an arms race between different firms trying to build out the best technology, because they found that if they could build the best technology, they'd have an edge over their competitors. But what's fascinating at that point in time was that you didn't have the regulation for the, you had the regulation for the markets, but you didn't have regulation around these electronic trading systems. And so because this was a time where you were going from having traders using keyboards to input trades, and people still obviously do this for in some contexts for some markets, but this was then converted into code and running as algorithms that automated a lot of jobs away within the financial markets. And so hence even pre and post GFC, you saw flash crashes and these sorts of things. And this kind of world of the trading was what ultimately became high frequency and ultra high frequency trading. But in its genesis, it was very much so technology driven, and it was all about just writing the best code and software. And there's actually parallels with respect to where we are right now with wider adoption of blockchain and cryptocurrency technology. In that, yes, you do have regulation in many jurisdictions, but of course the US being the most significant market in terms of for crypto and blockchain technology anyway, because of course China's for focusing on it in terms of more from centralized deployment. But we know that regulation is going to come, and what we saw happen in the financial markets there was that ultimately it got to a point where if you had outages with your systems, you have to now send reports to regulators. So it's nothing like as dynamic as it once was in the early 2000s. And it's kind of funny to see that the 15 almost 20 years later, where although blockchain, I see it as being a more significant technology just because of the broader implications of it. I think there's some really nice parallels there.
Yeah, it's a really good point. Yeah. Okay, so let's move forward a few years. In 2012, you moved to Sydney, Australia with your girlfriend, Layla, probably more of a beach opportunity than a career opportunity. But you did continue working with one of the big banks in Australia for a couple of years before moving to deliver the tech stack for a couple of financial startups. But at about the same time in 2014, we know that Ethereum was founded. Clearly, you were really interested in the technology from the beginning. I think you were mining Ether. So could you tell us how you first got into blockchain and more specifically Ethereum?
Yeah, and with respect to the move to Australia, there was certainly a part of me at that point in my life that's liked the idea of living by the sea and being able to surf every day. So it was a fun itch that I got to scratch. But then I came to the realization that there's more to life anyway than just surfing and living by the beach, but you can still get a lot of fulfillment from it. But to tie it back to the work side of it, whilst working at ANZ, I built out their OTC derivatives reporting platform. So this was off the back of the global financial crisis. You had the regulation coming into place from all the major regulators because you had these derivatives contracts that people really didn't have visibility of in the OTC markets that were really the creators of the financial crisis. And so so much regulation came in. The Dodd-Frank Act was kind of the pivotal piece coming from the US, and so these trades had to be reported depending on what assets were covered with them to the CFTC and the SEC, and this was all going via the Depository Trust and Clearing Corporation, which is responsible for settling large numbers of the world's derivative transactions. So you had that reporting, but then you had other jurisdictions coming into place as well. So you had like the JFSA, the Japanese financial services regulator. You had the Singaporean one, if its name escapes me. You had ESMA, I think, that was representing the US. And so it was just kind of this kind of almost like domino rally of like regulator after regulator instilling this, and these platforms were very important for the banks there. So it was fascinating to see that world, because it was the other side of the financial markets. In that, with the trading side, it was all about how fast can we make this stuff work, all very commoditized instruments, exchange listed stocks, equities, and exchange listed derivatives, whereas this world was kind of more like a world of legal contracts between different banks, and you've got these large volumes of data there. So it was very good for seeing sort of both sides of the market, so to speak. But yeah, I'd had itchy feet for a number of years with that. I think especially because the way in which the regulatory climate changed following the GFC, it wasn't as much fun as a technologist, working within these large financial institutions, because there was a lot more red tape. And as most technologists, feel, it's nice. Change is the thing that technologists enjoy. You're writing code, you get something written, you put it out there, you move on to the next thing. Of course, if there's bugs, you need to fix it and address it. But it's kind of exciting that. And when there's almost nothing worse for technical folk as having to do something and then not be able to do anything with it, and have to wait for politics to kind of figure out when it should actually go out there. And it's like the whole Facebook mantra around move fast and break things, which didn't really work out so well for them. But I think the essence of it is that technologists like to be able to create things and see the outcome of those things sooner rather than later, because if you leave it too long, you always forget what work you've done. And so that kind of set me on this journey working with startups, and worked for a home loans company where we're trying to launch a new type of mortgage in the Australian market, where we in effect would have been, we needed basically a pot of money that would sit on top of a bank's balance sheet, which isn't the easiest ask to get over the line, especially when you're a small little startup. And so we pivoted from there. But I got into this thing I'd come across called Ethereum back then. And so this was in 2016. So I wasn't one of those people who was there right at the very beginning, but certainly, I guess by most people's standards, still relatively early. The Ethereum network had launched in 2015. And I'd heard all the hype around blockchain, and I thought, yeah, this sounds like a fun thing to get involved in. I started digging beneath the surface. And when I came across Ethereum, it reminded me a lot of Linux. In the late 90s and early 2000s, I've been a big fan of Unix and Linux, and getting really involved in the open source communities there. And I saw there was parallels there with Ethereum because it had such a strong sense of community. And so I decided to build a mining rig first of all, just because it was like a fun, hardware project to do. But I built computers in the past, and so it was just actually getting the steel to put the case together and put some graphics cards there, and have something in your house that's sucking in like 1,000 watts of electricity day in, day out, making a room too hot. But it was fun, right? But then I went, having spent all these years working at these large financial institutions, there's been a lot of work on the Java virtual machine. Most of modern finance has been built on top of that technology stack. And I decided that, I started looking at, well, if you're one of these Java developers, how do you work with Ethereum? And it wasn't easy. And so that sort of became my next big focus, was to make that task a bit easier. And that was the genesis of this library, Web3J.
Yeah, that's fantastic. Yeah, I mean, talking about that library, in 2017 you moved back to London with Layla, got married, started a family, but you still had time to develop and maintain this fantastic library, the last mile of connectivity for Android and Java developers at the time. I think it's expanded a bit now. Who wanted to connect with Ethereum. This is, I just staggered by the numbers. Your libraries have been downloaded over 1 million times. They get downloaded tens of thousands of times a week by programmers all over the world interested in working with Ethereum. How on earth did they become so popular, and what really sort of drove you to write them and continue to maintain them?
So with Web3J, it was written very much so because there was a clear need for it, and I'd wanted, I'd liked the idea for a while to actually create an open source library. And again, this kind of stems back to my interest in the open source movements around things like Open Solaris and Linux as well. And with when I did some digging around Ethereum, there just wasn't a library for Java developers to easily integrate with Ethereum. You had Java software to represent Ethereum nodes, but that point of taking like a Java application to talk to an Ethereum node or deploy smart contracts on the network or read from them, it just didn't exist. And so that was why I created Web3J there, and invested a lot of time too in doing things like ensuring there was quality documentation, finding ways just to get it out there a bit more. So I think there's a talk that I did back in 2016 or 2017 that's had, like, I don't know, last time I checked, like 50,000 odd views about Java. It's called Java and the Blockchain, and had an article on it published in Oracle's Java magazine, and would be posting updates about what's happening in Reddit and blog posts. And so you're just kind of doing what you can to build awareness around it. I think nowadays I'd probably have started a Web3J podcast, but that was, this was going back a few years.
Yeah, that's a good point. Actually, it leads us on to the next question, really. I mean, you spent most of 2017 and 2018 building your new business. So back in London, you launched blk.io, which I remember you telling me was pronounced block.io, wasn't it? Yes, yeah. Which has now turned into Web3 Labs, Conor's business. Personally, you've been central to the enterprise Ethereum community since its inception. But Web3 Labs has built some really impressive clients, Microsoft, Consensus, and JP Morgan on the books. So, just to expand a little bit more, you've got these libraries, they're the sort of foundations of your company. Can you help us understand what is Web3 Labs?
Yeah, so Web3 Labs, it started off as an organization to support the development of Web3J. And really it was, as we went on this journey of working with different companies and clients, we've focused on building out products and services to support them with what they do. And so with Web3J, we continue to maintain and support it, and also provide training and support services for it. And then as well, we created the Epirus Blockchain Explorer, which we've always found so many organizations wanted visualization for their blockchains, but there wasn't really anything available there. And so we have that. And but then we've been doing a lot of services work too. And mainly the reason here is it's that classic thing around, during the gold rush, it was the people that were making the tools were the ones who kind of survived and had the longevity there, and that's kind of what it's about here. It's not about trying to get something out there really quickly. It's more about going along for the ride and strapping in properly and finding ways that we can deliver genuine value to the overall ecosystem. We're still in the very early days of Web3, so to speak. We all know it's going to be very transformative, but we want to ensure that as a business we're impactful in ways that have sustainable impact. So it's not that things get created and then a year later they're gone. We want to ensure that we continue to build on the foundations, and over time it compounds, and that as the industry grows, we grow with it.
Very interesting. So in 2021, you launched a remarkable series of video podcasts. And you've started to talk to other innovators, people who are building things with Ethereum, and in the Blockchain Innovators series, that's also available from your website. And now you've decided to write a book. So what did you set out to achieve with the Blockchain Innovators Handbook?
Really, the intent behind it was just to share knowledge. It was having been living and breathing this technology day in, day out for the last 5 years, and also having spent the 10 years basically before that, working in large corporates and understanding their agendas too, I wanted to combine the two and actually provide something that leaders and people who have the ability to, I guess, look at their own businesses and reflect on, where some of the big challenges are, and give them really a framework with respect to how they can use Web3 technologies like blockchain and the things that have come off the back of it, like DeFi, NFTs, and so on, a decentralized identity, and so on. And you use that as a way to, well, to solve problems within their businesses, but also to find new business opportunities. So it's like with when the internet came along and it's in its different iterations with Web 1.0, people hadn't really figured out business models around it other than just serving up information. And then with Web 2, you had this idea of the read-write web, where people were able to create interactive services. Social networks were a massive part of that, but of course Google as well there. And then with Web 3, you have this ownership and governance angle to it as well. So it's it really is a big increment. Well, sorry, it's far more than an incremental improvement on what you have with Web 2. It's just it completely rewrites what's possible with respect to business models. And so the intent behind the book was really to give, well, impart my knowledge in terms of what's got me to where I am, but also provide practical steps for people to actually go on a journey, so to speak, with Web3 technology.
Oh, fantastic. Well, I think that's a great segue really for us to see if anyone on the call has any questions they'd like to ask Conor.
I'll go ahead. My name is Sonal, and I've worked with Conor, or heard of him on the baseline side. I'm with Consensus Mesh. But I haven't gotten a chance to read the book yet. It just came in the mail yesterday, but I wanted to ask what it was like writing the book. I know there's a lack of quality resources in the space, and a lot of people don't have the time or knowledge to actually step forward and provide those resources to people. So you're clearly a very busy person. You have a lot going on. So I was wondering how and why you were able to write the book and provide it to us.
Thanks, Sonal. So in terms of the approach to it, the first thing that I found completely game-changing from my own experience was reading Stephen King's On Writing, which is kind of semi-autobiographical. It's really a book where he is describing how he became a writer and his approach to the writing process. And while someone like him is churning out 2,000 words a day every day, that's his job, and he's been doing it for years. I think the point was that when it comes to writing, what you need to do is, rather than and this is how historically I'd always approached it, was you write something and then you go back and edit it and refine it, and then you find that you spend quite a lot of time on be it like a blog post or just some sort of post there. And what he really lays out is that when you're writing, you just need to be getting what's in your head on page, and don't review it or try and edit it then and there. You just externalize what's in your head and just keep doing that every day until you've got and then in my case it was till I had 30,000 words written. And then once I'd got to that milestone, I actually, that was the first time I went back through it and read what I'd been writing. And I think that's absolutely critical, because it's so easy naturally, so many of us, especially when you're thinking about something like a book, is that you want everything to be as perfect as you can make it. But if with that perfection, it can be a huge stumbling block to actually getting it done. And also procrastination can come into it and so on, or you can find yourself wanting to cross-reference things. And so it was that approach of just making myself just write the words every day until I hit that milestone of 30,000 words. I had planned out an overall structure for the book beforehand, so I'd spent time thinking in terms of how many chapters is this going to be. It's going to be in 3 parts. These are the different chapter headings. These are subject headings within it. So the key thing there was that when it came to writing each day, I wouldn't be there thinking, what shall I write about today? It would be, here's something I need to write about. Let's just, I'm going to write this many words about it. Then if I covered all of that, then I'd move on to the next thing. So you're never trying to figure out, the topic you're trying to cover, because you've planned out a rough structure, but then it's just about getting the words there. And so that was kind of the approach. And it was just about, in my own case, I had just had to ring fence time every day in order to do it until I got there. And then it was working with, I was fortunate to have, there was a number of people who volunteered to be my beta readers, who I, after I'd done a couple of iterations of the manuscript, sent it to them for feedback. So this included Alex here, but also shout outs to Mo and Christian from Web3 Labs too, and another friend of mine, Harry, as well. And so there was, and then Mariana too, who's from ING too. I thank all these people in the book, of course, but they gave really useful feedback about it, which helped me then refine it and helped it sort of come together as a book. And so that was kind of the approach and how I went about it.
It's a great question, Sonal. Thanks for that. Does anybody else have any questions for Conor?
Yes, I've got one. Hi, hi Conor. I'd love to know, where do you see the biggest opportunity for all of this technology? Like, who are the people who should be looking at this right now?
Yes, it's great to see you, Laura, as well. And with I think the thing is, like with the internet itself, there's so many ways in which it's impacted society. And so with Web3 technology, I think there's kind of two very different ways in which it can impact the world. One of these is in those parts of the world which have less stable monetary systems, or they have problems like hyperinflation and so on, because typically in those regions, the US dollar is the nearest thing they end up having to a stable currency, but it can be physically very hard to actually get hold of, because it's not like people can just go to a bank account and deposit US dollars in these places. Whereas with cryptocurrencies, all you need access to is a digital wallet. And then you have the ability to have digital versions of US dollars, which aren't controlled by the US government. And there's regulations likely to come in that might make it a bit harder for the companies producing that, but it's still, they're not something that are likely to go away. So that's an incredible resource for these sorts of places. Sorry.
I was going to say, and what about like that's like, it sounds amazing and is doing so much good. Personal interest, obviously I work with a lot of financial brands in the UK. Like, what do they need to know about this, and why do I need to tell them that they need to read this book?
So in terms of within the financial arena, there's a number of places where it's already having impact. One of them is central bank digital currencies, and you can think about that in terms of right now with money, when it's issued, you have a central bank like the Bank of England that controls the supply of pounds. And what they do is they empower some of the largest banks who are, what are considered regulated financial institutions to be able to, in effect, distribute that money to people. So when you go to a bank and take out a loan, they're not necessarily creating, they don't have the cash reserves to back all of that up. They have a certain proportion. But what you have in that world is, you have basically money that's being transferred between these regulated financial institutions and central banks. And when things like quantitative easing happening, there's all these systems that need to talk to one another. And so where we're seeing a lot of traction here is around putting that onto a blockchain. And these are blockchains that work using the same technology as the Ethereum network, but it's private and it's kind of ring fenced by these banks. And this is something that it's just a question of when it actually takes over, because it's far more efficient than what you have right now. So that's one area. You also have it with respect to settlement of financial assets as well. Anything that goes through an intermediary right now with blockchain, you can do it programmatically and remove the need for that intermediary too. Okay. And so it's kind of it's all about where you shine the spotlight, so to speak.
Could it like work for mortgages and stuff? Where the mortgage has to go to a certain place and then it You know,
So-
when you buy a house and all of those sorts of things, could it work with that for a swifter transaction?
Yeah. There's a few areas. One is land registry and title deeds, for instance. That's if you have a master record, so to speak, on a blockchain. There, it makes life a lot easier when you're sort of going between solicitors and banks and all this sort of stuff. But then you actually have the mortgage products themselves, because in the securitization markets, of course, you have banks that will take bundles of mortgages and create certain types of security that have known to be toxic in the past, but it all depends on exactly what sort of mortgages they are. But the point is, though, as long as you have the right risk controls in place, but also the sort of transparency that blockchain provides as well, can actually make it a lot easier to actually see what's happening within these systems, because it's not that you have on this bank, they've got a database somewhere which is storing some information, and then this bank over here's got their view, and they're slightly different views. With the blockchain, that key state or transaction information lives in a place where there's one golden source of it, and that's absolutely key here, and why it is so powerful.
Brilliant, thank you.
Fantastic, thanks for your question, Laura. Conor, I might just read one of the questions that's come in here from Milan. Thanks very much for your question. It sounds like Milan is a Java developer, certainly for some of the time, and he's asking, how different, if at all, is blockchain development with the Web3J library from building APIs with Spring, for example? Do use cases include working on the Web3 library development or applying it to fulfill the needs of the clients?
So where blockchain differs is with traditional developments, you kind of think in terms of things of you maybe have a storage layer, and then you have a layer which is serving up data and might make APIs available, for instance. Whereas blockchain kind of has those pieces, but then it also adds in distributed systems and cryptography. And so it's the addition of those which I guess make it a bit more complex and increase the learning curve, because blockchain is cryptography. That's one of the key building blocks of it. And so in order to actually understand it, you need to have an appreciation of certain cryptographic primitives. There's the idea of like public private keys and hashing. They're cornerstones of cryptography, but you need to understand them. Yeah, so there's that part, but then the distributed systems angle comes into it as well, because you have these blockchain platforms are made up of decentralized nodes running around the world. And so it's not necessarily trivial to convey information around them in the same way it is if you've just got one computer talking to another. And so that sort of means that there's certain barriers to entry in terms of understanding what's happening on the blockchain part versus the traditional application. And then in addition to that, you have the languages themselves that are used for writing these smart contracts too, which are really, you can think of it as business logic that lives on a decentralized network. And so I know I've thrown like a number of different things here, but I think the key point is for technologists anyway, there's understanding cryptography, understanding distributed systems, and having at least the rudimentary knowledge of these concepts. And then for the specific blockchain platform that you're working with, you need to understand what the integration points look like, how you write the logic that resides on the blockchain, which is using a language called Solidity in the case of Ethereum, but in other blockchains it can be other languages there. So Web3J, the library, makes it as simple as possible to do that for a Java developer, and it provides an entry point for it, but you still need to get your head around certain concepts, like public key cryptography and hashing and so on to make sense of what's happening.
Milan, that's a great question. Thanks very much. Another question from Daniel. Hi, Conor. Congratulations with the book. Looking forward to reading it. I have a question about digital identity. Where do you see blockchain and identity going? Do you think it will be ERC 725 augmented with self-sovereign identity, another standard we have currently, or currently not possible and waiting for proper zero knowledge proofs, or perhaps something else?
So with respect to decentralized identity, this is another really hot topic with regards to blockchain and Web3 technology, because right now, when you think about your online identity, it tends to exist as either an email address and a password, which you create on a website, or it's a social login using Google, Facebook, Twitter, LinkedIn, or whatever else. And the big criticism of these approaches, one is that an email and password does feel quite archaic given how long we've been doing that for. And then with the kind of social logins, the criticism, of course, is that, well, this enables the providers of those services to see all the different online services that you're using, because you're using their infrastructure to sign into these and sign up for these other products and services with other vendors there. And not only is that you're giving a lot of information available, making a lot of information available that these companies have found very smart ways to monetize, especially in the case of Facebook. There's also the privacy angle too, in terms of they know an awful lot about what your online habits look like, in the same way that sometimes you might be on a site and you see targeted advertising and you're thinking, how on earth do they know to target me with that advert? It's not random. And so this is the idea of decentralized identity is kind of a key tenet of this, where instead of having to rely on these centralized services, what you have is a company or a trusted entity. So it could be a government, for instance, a government entity. They issue an academic institution, and actually I'll give the academic institution one because it's quite straightforward, I think, to follow. But if say someone does a degree at an academic institution, in order to prove that you've done that, right now people will get a certificate, and that say university has a record that they can verify. If someone phones up to say, hey, we see this person studied there, is that true? And someone can say yes, or maybe they can email to attest to it. With decentralized identity, what that university would do is say Alex would go and say, yeah, I've done my degree with you. And what they would do, they would issue what's called a credential that basically says that the person with the identity that Alex gives us has completed this degree. And the thing is, though, is that the identity that Alex provides there is it's not like all his details. It's more that Alex says, hey, here's my public-private key pair, or maybe present it as a digital wallet, and they will say that someone with this identity created this, has got this degree here, and then that credential is something that Alex can then show to other people, and they can verify against the issuing institution. So it's all. It's hard to sort of explain it simply, but the point is it enables you to prove that you have a degree with an organization, and you can do that without having to reveal necessarily who you are to the person who wants to see it. And so it's quite groundbreaking in terms of this approach, because it gets rid of all the conventional things. And so with tying this back though to the question, the view is that with blockchain technology anyway, the intent is that people can have details of, the academic institution. It could have a key associated with its organization that lives on top of the blockchain, which is then used to subsequently prove, that they are who they say they are. Or you could have a link to your identity there. And with things like this ERC 725 that's mentioned here, the thought is that there's ways of encoding this in smart contracts. But I think, to answer the question more specifically, I think that I don't think ERC 725 will be the standard on its own, because I think off the top of my head that's fairly heavyweight, because it requires a lot of smart contracts for identities. I think it's more likely that we'll have it's going to be more, and less of it's going to live on the blockchain, so to speak. I hope that makes sense to people. Bit of a whistle-stop tour of it.
Thanks, Conor.
I think, Conor, this is Margareta.
Oh, awesome.
Yeah, it's really,
I need a virtual pen to sign it.
Oh, yeah. But thanks a lot. I'm really interested in the convergence of multiple advanced technologies. So AI, quantum computing, blockchain, nanotechnology. So that's what I write about. And so I have a lot of readers who don't know that much about blockchain because they're so focused on quantum and AI. So I think they'll be excited about your book.
Oh, thank you. And yeah, I think this is always the thing. It's like you have people who are down the rabbit hole, and then you have those who haven't even scratched beneath the surface. And there's still so many people who haven't scratched beneath the surface who want to be able to educate more on this.
Wonderful. Thank you very much, Margareta.
Yeah, I'd like to say that game theory is all about players, outcomes, and strategies. Within traditional finance, it's very easy to measure success with the base asset of US dollars. Dollar go up, I'm doing well. Conor, how do you measure objectively success within the decentralized economic system?
I think with I mean, there's lots of different ways you can look at it. If you want to look at it from a purely idealistic decentralized perspective, it comes down to, well, how decentralized is this protocol? And this is something this whole narrative is playing out very actively at the moment, because you have the Ethereum network and the Bitcoin network that are very decentralized in their nature, because they weren't, although they were. The Bitcoin network never received any funding to get going. The Ethereum network did receive some funding, but it was open to anyone, whereas a number of subsequent blockchains that have emerged have received a lot of funding from venture capital firms in order to get them off the ground, and they create tokens with those. And then, of course, from the perspective of a VC firm, it enables them to get to a liquidity event far faster than they would have with more traditional investments, because of these blockchain protocols have tokens native to them. So as soon as those tokens are native, then there's potential exits there. And so as a result of that, what you see is what could be considered a success metric associated with these blockchain networks, which is the perceived value of their networks, which is typically captured in the form of how valuable their token is and what the market capitalization is of it. And if you head to Coin Market Cap, for instance, you can see a list of this. And so it just depends on what your reference point is. But I think if you're going to be, take the most altruistic perspective, it's going to be how decentralized this network is. Where are all of the nodes running? Are they spread? Are they in diverse geographic locations? Are they running on lots of different specification hardware as well? Or are there barriers to entry to actually run the hardware because of the cost there? Those, I think, would be the most altruistic ways of looking at it. But then if you want to sort of measure it in a way that is compatible with I guess more traditional capitalist type structures, it's going to be, well, what's the perceived value of the network in a monetary from a monetary perspective.
So you gave a very industry protocol heavy answer. Thank you. That's very very useful. I agree that decentralization is one of the most important factors for any project moving forward. But I'm asking also from an individualistic standpoint. So you mentioned perceived value, or how are you perceiving this value? Is it remained in US dollars? Is it Bitcoin? Is it Ethereum heavily for you? How are you measuring the success of yourself as an individual actor within the decentralized crypto economy?
I wouldn't say that I do measure myself against it as such. I go with what I guess what interests me, and I do, of course, look at it from the perspective of how my business is doing as well, in terms of just looking at what our revenue figures are like, what the EBITDA is, for instance, from what one year to the next. If you though want to sort of move away from the lower level sides in terms of the token economic side, I think where you can start to think about impact is when it comes to governance of these blockchain protocols, because the key idea is something that I touched on earlier on, was that with Web3, it doesn't enable you just to read or write, but it also enables you to own part of the protocols. And there was a famous piece, I think it came out of Union Square Ventures a number of years ago, talking about fat protocols with that respect, because you can actually imagine if the internet in its current form had a token associated with it, it would be very different to where it is now, because the people who created the internet would be the ones who had done best financially out of it, as opposed to the significant web companies. And so with Web3, there's the potential for an alternative approach there, but I think the key enabler there is governance, because people are incentivized to participate in the communities via these tokens that are associated with, be it the project or the underlying blockchain protocol itself. And so when you want to measure the success of those, it really comes down to, well, how efficient is the actual governance process? What and in the same way that you'd look at an electorate, you'd look at how many people are actively engaging in the discussions associated with the governance. When it comes to voting, how many of the available token holders are actually casting their votes? Is there delegated voting there, for instance, in order to improve it? And so these are just some of the different considerations, but we are very early in this space as well, though, so it's going to get fleshed out more, but you certainly have those core kind of building blocks that can be considered measures of success in this space.
Great.
I've got a question. Hey, Conor.
Go for it, Josh.
Congratulations.
Hey, Josh, how you doing?
I should ask a question about mortgages, but for those that don't know, Conor and I worked on a startup many years ago in Australia, trying to do some innovation in the mortgage space. But actually leads on well from your last question. I'm just wondering, with some of the real or imagined contention around elections recently, have you seen any applications? I know there was a company, HST, out of Australia in the last kind of crypto boom in 2017, looking at trying to fix voting. I mean, it seems like a perfect application, but have you seen anything there, or do you see any future there of moving, I guess, elections and voting into the blockchain space?
There definitely is, on the surface anyway, like a really good opportunity there. And I think that there's a couple of barriers, though, to it. One of them, of course, is that you need to have a platform that makes it straightforward for people to engage with. And if you have lots of different vendors doing different approaches, you end something that's not really using blockchain as such, although it might be using it behind the scenes. It's got to be quite a standardized platform to places to really get the most value out of it, or serving very significant numbers of people. So that's about the maturation of the underlying technology itself, and getting to a point where people are comfortable engaging with it, say via a wallet on their phones or whatever else. But then the other part, though, is of course the legislative side of it as well, because it's not always that straightforward. It's like in the US, for instance, the challenges with where they can actually create sites for actually for capturing people's votes and so on. There's a lot of very old legislation there which actually restricts what's possible with respect to changing these things. And as with all of this, it's about whether you can get the legislation to get updated in a timely enough way to actually be able to make use of the technology. And given what's at stake with voting, and that it can be very divisive as well, how innovative people want to be with that, depending on what their areas of focus are and what sort of electorate they're representing. It's probably going to take time.
Thank you.
Fantastic. And if anyone has just thought of a question, we can always send them in, and I'm sure Conor will respond on email to you later. So Conor, one final question for you from me, if that's all right. When I read your final copy of the book, I noticed that you've dedicated it to your family, but also more broadly to the neurodiverse. Why is that so important to you?
So neurodiversity is a topic that's very close to home. So I have a kid that's neurodiverse, which basically means they have additional educational needs within a classroom setting. Neurodiversity, it's a term that's used to just describe a number of different Well, the things that make people slightly different, so that they don't necessarily slot into more conventional settings for things like learning. And so what's called atypical things like autism, ADHD, dyspraxia, dyslexia, all of these are kind of hallmarks of different types of neurodiversity because it manifests itself in many ways. But from our own perspective, it's something that's it's very hard to get support for when you actually find you need it. And so in an educational setting, you have the notion of SEND, which is special educational needs and disability. And so with children, when if they have very visible signs that of where things can be challenging for them. So, for instance, when people are physically disabled, it can often be quite obvious. Whereas neurodiversity issues are things that often will not come across very clearly because it's things about mentally how these people are. So sometimes it can be detected fairly quickly because it might be someone's very delayed with respect to learning to speak, but in other times it can just be that they don't really get many common cues that people, so-called normal people do, like being able to interpret body language and everything else. But in many places, there is actually support available for parents with neurodiverse kids and the young there, but it can be very hard to find it. And we were very fortunate to find a charity called Skylarks, and they have something called the Send Advice Service, which is basically an advice service for parents and carers of young people who are neurodiverse. And so what they do is they provide free advice, but it's coming from a legal perspective of what rights families have with respect to getting more support in an educational setting, and also just different groups that they can go to in order to connect with other families and just learn more about it. And the way I see it too is that, of course, in our own instance, we have there's an angle to this which is close to home to us. But I also think of it to quote Rao say earlier, in a more macro perspective, because if you think about so many of the problems in society will be caused by people who grow up maybe without the tools to engage within modern society. So we all know how, for instance, if people are very clever, and they some people naturally are, even if they come from a background where they might not necessarily have as much access to resources as some people, just because they have that sort of spark or that brightness, they're able to go quite far because of it. Whereas if you think about similar children who maybe struggle with social issues, or just don't really find it hard to relate to other people, they often don't stand a chance, especially when they're coming from less privileged backgrounds. And what ends up happening as a result of this is that in more severe cases, these children will get told that they get excluded from schools, and more often than not, and this is something that we'll hear more about, they can be single parent families as well. So you end up in a situation where you have a single parent looking after a child who's excluded from school, who has challenges engaging within that setting, and then where do you think they're going to end up? It's just like setting them up for failure in life because they don't have the support they need. And this is why Skylarks and their service, I think, is so incredibly valuable, because what they do is it's available for free. It's available to anyone at all, of course, in the UK in our instance, but to get the support so they can actually help parents to know what their rights are, to actually get the help and ensure that their children get the best support. So that was really the motivation behind deciding that all author proceeds from this book will go towards Skylarks and their Send Advice service.
Yeah, I think it's fantastic. On Tuesday, we were really privileged. So this was at the book launch event in London, the physical event. And we were really privileged to welcome a lady called Jennifer Peters, who is actually an American lady who lives in the UK. And she is the chair of the board of trustees for Skylark. And Nancy, who's also on the call, has captured the video of Jennifer speaking on Tuesday. And we can play that for you now.
Thank you, Conor. I think you articulated your journey thus far very, very well, and it is a lifelong journey. Just to give you a little bit of background about myself, as you can tell, I'm American. I've been in the UK off and on over the last 13 years, and my daughter, who's now 10, is autistic. I kind of was saying to Lila, I feel like I say a lot of times, we were lucky. We were really lucky that we found out that she had autism when she was just really 3.5 years old. And that was only because she was delayed in speech. And I think, quite honestly, which is not always the common thread that the kids have, that they have delayed speech, that is what ended up giving us and getting us the support that we needed, because it was a very obvious disability that she had. She is now a mainstream child at age 10, and when we were 4.5 and she actually got her diagnosis, we had come to Richmond Borough. And I think, it's funny, there was so much going on at that moment, and it's just a whirlwind when you're going through this journey, that I really do think I Googled, it wasn't Skylarks at the time, it was Me Too and Co., which obviously you know why we rebranded the name. I think I Googled it and found them, and I was telling Lila on the phone the other day, I said very early on, we were you know, coming to the center, and they were like, wait a minute, you have a lot of professional experience that we could really use, and very similar. I actually don't know Conor and Lila's story that much, but he did mention prior that usually what does happen is that when you have children that have disabilities, you end up with a lot of divorce in the family, because the stress on the family unit is very difficult. And if you don't have a divorce, you usually have a single parent breadwinner. So a lot of the parents are becoming carers. And we've all seen what's happened with COVID and how important it is to have carers in the community. But so that's a little bit of my background. My professional background was I used to be an HR director. I used to be. For L'Oreal, I was working in the US, worked in Paris, worked in Hammersmith here, and then we went on a little bit of an international journey. But what I'm here to talk to you about today is just the community. That was one of the words that came up a lot today. Of Skylarks and what it is that we do, and the journey that we've honestly been on, which has been since 2006. The charity was found, or 2006? No, that's not right. 2006. Way before I was involved, but I've been involved about the last 6 years, and have been chair, and we've been on the journey of really creating a place for our young people, and that's really what we're striving to do, is not just as they're young children, but as they grow into adults, and what does that look like, but giving them the same opportunities that we all deserve as human beings on this planet, and that's our ambition, is to really create a place where they belong. This is the highlights of the year. I mean, I wanted to share this with you. We're going to kind of go backwards in the little bit of the presentation, end with a video, just that gives you more of a clear idea of what it is that we do. But wow, what a whirlwind. I mean, where most businesses were contracting and trying to figure out how to survive, we were just imploding. So we are based in Richmond upon Thames, but because of the pandemic, we now service families all over the United Kingdom, which is fantastic. So last year we supported 800 families. We created a whole online offer for them. When we did come back to our actual physical center, we were able to offer 7,000 sessions using obviously COVID compliant measures. And now 40% of our offer is online. And that's critical. That was some of the ambitions that I know I had when I came to the charity. I ended up quitting my job and my profession so that I could figure out this, web. We talked a lot about the web. It's quite dysfunctional. It's quite archaic. It's, run by, a lot of different government services, and it's quite broken. And that's how Lila and Conor came to find us, is because we try to fix that for our families. We also spent a lot of our funding, our independent funding, on counseling this year. As you could imagine, we had families that were in lockdown, and they were, quite the forgotten people in the world. Well, we can all imagine what our lives were like in lockdown. Imagine when you have a child that's going off the rails, that isn't getting the support that they need and has no educational environment to go into. So online we did kind of 2,800 number of bookings, and this was to access things. We do everything for the entire family. So that's from drama to cooking to yoga to storytelling to imaginative play activities. We do peer support groups for parents, which is critically important. And that actually was a huge learning for us, because now that these things are online, our network is growing, and those things work better online than in person, quite honestly. But what Layla and Conor were speaking about is about this Send Advice service, which is a strategic initiative for us. We actually hired our Send Advice manager in April of 2020. So she's been in place, 2020. Can't remember the year, it's all blending together. She started in the beginning of the lockdown, and that was bringing everything in-house so that we could have a lot more control and better customer service around it. And that has actually proved to be the best thing. So this is legal advice that helps, as Conor was saying, and I won't repeat what he has said, but it helps those parents to make sure that their child gets the right educational setting for them. That could be in mainstream, and we should try as much as possible for that to be in the mainstream environment. Every child has a right to access that. Or if not, the real specialist support that they need in a special setting. And the funding, obviously, that goes behind that, which is, significantly expensive. So, as I said, we launched the service. We do live webinars for families. We do individual triage appointments, so taking them on that journey, empowering the parents. That's one of the most important things that we do. And the ethos of Skylarks is to empower the parents. They are the best advocate for their child. We have that on-demand content, so now people can access that 24/7, and different resources that they have available to them that they can help themselves. So last year we supported over 400 children through that, and probably the amount of money, I just still don't think we're getting it right in terms of ticking a box to say what does it equate, but some of these packages of support can be in the hundreds of thousands of pounds annually for these children. So this is something that even if you have resources is financially crippling. And the reality is that most of the families we have, this is not necessarily an issue that starts with their child. It's something that has been generationally happening in a family, so they're not able to advocate for themselves and for their child. So I'm just going to end, not to go on. I'm here to talk to anyone that wants to learn a little bit more. As they did say, we are completely independent. We have no government funding. We've been really lucky and blessed over the last couple of years to have a lot of support from I would say the corporate environment. One of our corporate partners is Haymarket Media, which owns like Campaign Magazine and those kinds of things. And that has really helped us to start to accelerate what it is that we can do. And one of the initiatives outside of the Send Advice that we are focused on for this year is we have a planning permission in to build a £3 million building so that we can actually deliver in-person services in a much more effective 5 or 7 day a week environment. But I'll just leave you with this.
I would describe it as a hub of information and a support network, and a very nourishing and nurturing place to visit. My son Jamie skips in and just loves it.
We're seeing them grow and we're seeing their potential, and charity like this allows us to do that, whether it's play or therapies or just chatting to another parent over a cup of tea and just bonding together as we travel through this journey.
We're based in Richmond upon Thames, but anyone from anywhere is welcome. We also look after their parents, their carers and their siblings. It's kind of cool, I think.
I love karate. Play football. It's very fun.
Why like coming here?
For me and my brother to play here a lot.
That's nice. So thank you very much, and I'll see you soon.
Thank you.
What a super video. And a great cause as well. Conor, I think it's really great that you're giving all the author proceeds to Skylarks. I think that's super. So with that, I would just like to thank everyone for attending today. It's been great fun, and I'll pass back to Conor to close tonight's event in London.
Thanks, Alex. And really, I just wanted to use this opportunity to give my thank yous to everyone that's helped make this, the book a possibility, but also with the launch events as well. So I'm forever indebted to Alex, of course, for being the compere, not just today, but also for our events on Tuesday nights in London too. As well, though, I wanted to thank all of the people who were beta reviewers for the book. So, of course, Alex, you've got you there. I think I mentioned people earlier, but Mariana, De La Villa Gomez at ING, Harry Winstein, Mo El-Shami, who's CTO at Web3 Labs, Christian Feld, our head of services too. That side of it's made a big difference too, because it just challenged my thinking on what was being written, and hopefully the end result is better for everyone as a result of it. I need to also thank the publishers, the Rethink Press, who are hybrid publishers here, who just helped with getting the book out there, and things like the copy editing and formatting and typesetting and these sorts of things, and Daniel Priestley at Dent, who helped push me to actually make it happen. And then the family side of things, my wife and siblings and this side of it, but then finally as well just the team at Web3 Labs too, because a company isn't really anything without people, and so I'm very grateful just to have the people on board that I do, and being where we are as a business too, with so many exciting opportunities. So that's and finally, of course, thank you everyone for being here for the virtual book launch too.
Brilliant. Thanks, Conor. With that, I think we'll close this evening's call. Thanks again, everyone, for joining.